Hello and welcome to Pro Trader Strategies Market Commentary for Friday, April the 15th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data coming out today. Here in the United States, we had Empire State Manufacturing Index came in surprisingly at 9.6 versus a 2.1. That was quite a surprise on the upside. But we also got manufacturing sales in Canada that came in at negative 3.3 versus negative 1.4, so worse than expected. But back here in the United States, capacity utilization came in slightly under what was expected at 74.8. That just means how much the manufacturers are really using. They're not, or using at full capacity, percent of full capacity, I should say. Industrial production came in at negative 0.6 versus negative 0.1, which is kind of off of that capacity utilization. And we had University of Michigan consumer sentiment, which came in at 89.7. That's just how the consumer is feeling about the overall economic environment that they're in. Let's get moving on. I got a lot to go over today. As you can see here, NASDAQ /NQ just treading above water, up about 3/4 of a point. Earlier today, they were down about 15 points, but we've come back from that. As you can see here, /ES, the E-mini S&Ps just moved into negative territory. As I was getting ready for this, they were just slightly in positive territory. Onto the daily chart of the E-mini S&Ps, again, /ES. As you can see, a really tight range, not a whole lot going on. One could argue that this is an inside day for the most part of what we saw yesterday, trading inside of yesterday's range, but right at the value area of the last several data points. On to some trades that I'm working with or letting roll off. It is Expiration Friday, so I've got a lot of trades to go over that. Some of the ones that were not working out, and those are the ones that I let go all the way to expiration. Usually I talk about this, that I'm covering my management at about 50% of max profit. On the ones that are losers, that are defined risk, I made my bet, I laid in it, and I'm letting those expire worthless and just waiting the bidder in to see if something comes back into line. And if it is undefined risk strategy, then I've rolled those out. We also have a lot of these earnings calendar trade setups that I did for a webinar, and the front month is coming off, so I'm either covering those or letting those expire worthless, and then riding my long option strategy into the earnings event. So with SPY, I had on the April for weeklies, and I had on the 197 calls that I was short. I rolled those out to the May 2 weeklies and collected another 52 cents. Of course, that is a losing trade, but just going to keep rolling that out in time, collecting more credit, lowering my basis on that, and hoping for a bit of a comeback down to that 198 area. I think my break even right now is right near that 200 level from all the credits that I've collected on that going back. And then I had on the April 183, 193, 203 iron butterfly in there. And that one obviously is a max loss on there. So that one is going to roll off as a max loss. Just going to let that one expire. Then I have on the McDonald's trade, which is ticker symbol MCD. McDonald's on this one is part of that earnings calendar setup that we did a webinar on, and I have on the April 122 puts, and then I'm long the April 4 122 puts. And the April 122 puts that I was short, covered those for penny yesterday. So writing out the April 4 weeklies for that earnings trade. So I'll be long the April 122 puts, most likely going into that earnings event. On to, let's see, IBM. IBM here, which is ticker symbol IBM. And I have on this for the earnings calendar trade setup also April 145 puts that I'm short, and then the April 4 weeklies I'm long the 145 puts. On the April 145 puts that I'm short, today's expiration, covered those for 3 cents yesterday also. So those I'm letting the April 4 weekly, that 145 puts that I'm long, ride out into the sunset for that earnings trade. And then on to Adobe. Adobe I have on the Iron Butterfly. This is the April 85, 90, 95 Iron Butterfly in there. And it's not quite a max loss right now. The max loss on that would be if it was trading above 95. I'm hoping to see a bit of a pullback there. If I get around the 92 area, that's going to be, or 92 and a half area, that's going to be my break even. Doesn't look like that's going to happen today, so it's going to be a marginal loss on that one. And then on to Johnson & Johnson, which is the other trade that I have on. This one was, I just put on for basically a delta adjustment on this. And for Johnson & Johnson, I have on the, let me check this out real quick. With Johnson & Johnson, it was just basically a shot for it, and got some calls thinking that we were going to rally up into that 110 area and make a new high. It did make a new high this morning into, as you can see, 110.40. Was thinking maybe we'd get a little bit of a push higher, but it looks like it's starting to come back off today. Was hoping for a little bit of a push higher because that April 110 calls I'm long, paid 65 cents for it, and looking like I'm going to let that one just die on the vine and hopefully get a push higher, or maybe get into that 110 area. I think I probably need it to get about 110.60 or something like that for the break even. We'll have to see because there's just not much time left on that. So moving on to FXE. FXE is a trade that I put on also, and this one is an Iron Butterfly also, and I have on the April 100, 107, 114 Iron Butterfly in there, and that one is right around my break even right now. I need to come off just a little bit more and it'll start coming into the money, but I'm probably going to just let that one go until the very end of the day before I even think about trying to cover that. If I can get to break even, that's where I'm going to look at doing that one. On to Oracle. Let's do love real quick. I have on the April 45 calls in there, and I got filled on something. I don't know if that's this one or not, but on love, this is part of that earnings calendar trade also. I am short the April 45 calls and then long the weeklies that have that earning event in it. So that one is also a part of that trade. So I'm looking to get out of those 45 calls in there. And then on to Oracle. Oracle is ticker symbol ORCL. And in Oracle, I also have on a Iron Butterfly in there from the Iron Butterfly webinar from quite some time ago. And it's the April 32, 37, 42 iron butterfly in there, and that one's a marginal loser. So basically with a $5 wide iron butterfly, I was looking to collect about 50% the width of those strikes, so collecting about $2.50. So having said that, I need this to come to about $39.50 for that to be break even. As you can see, it's not there, but it's not quite a max loss on that one. Then on to Macy's. I got to try and pick up the pace so I don't bore you guys to death. I have on the April 42.5, and then the May 42.5 calendar, also part of that strategy. And I covered the 42.5 puts that I'm short for $2.05. So lost money there, but because the volatility has slightly increased since I put that strategy on, and we have on the May 42.5 puts, which is worth a little bit more, made more money on that than I lost on the short put. So that one's still profitable. And then on to Tesla. Tesla, I have on the April 220, 225 call spread in there, and that one is obviously a max loss at, unless I get a $25 sell-off today, which isn't likely. Actually, I need about a $32 sell-off for that to be profitable. Not going to happen. And then in YHOO, ticker symbol YHOO, I have on the April 32, 34, 35, 37 iron condor in there, and that one is right around being very close to break even. Need about another 30-cent sell-off. I think my break even is right around $36 for that one, so that one's close to being break even. On to Yum Brands, I have on the April 60, 62.5, 80, 82.5 iron condor in there, and that one is break even around $80.70, maybe just slightly right around $81, I think it is. So I need a bit of a sell-off in there, about $1.80 cent sell-off in there to be having that come into the break-even territory. So that one I'm letting go off also. So those are all the trades that I have, and what is going to expire worthless and or at a max loss for you guys. Today's webinar is going to be on the strangles, and I'm going to talk about that. It's a naked strategy, so it's not really going to be appropriate for IRAs, but I'm going to talk about that, how you can protect that if something goes wrong, and kind of like that, the Twitter and the GoPro, how I've rolled that out. I collected credits for that, even though it's been since December when I put those on. The GoPro is now profitable. The Twitter is getting very close to it. So even though those naked strategies are losers, sometimes we can work it around and collect more premium, lower our basis on that, become profitable despite the fact that we are in the money. All right, so check that out, protraderstrategies.com. And if you can't take that, take it easy.